In this video, I will show you everything you need to know about getting a fix and flip loan for your next real estate project. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, outsourced CFO and commercial lender, helping you scale your business. If you're ready to grow your business to 7 figures and beyond while creating the financial freedom and the lifestyle you want, then don't forget to hit the bell and subscribe to my channel so you're notified every time a new video comes out. Hey everybody, today we begin a new series I'm calling Fix and Flip Loans. So stay tuned because every week I'll be releasing a video on the topic, and it'll be about 4 to 6 videos. If you're new to the concept of house flipping, or fix and flip loans, I'm hoping that this information will help you understand those key concepts. If you, on the other hand, if you're an experienced flipper or if you have a few deals under your belt, I'm hoping you can get more insight on how an underwriter or a lender looks at your deals. For the experienced house flipper, this could be an incredibly lucrative business. With some, fix and flippers are making anywhere from $25,000 to as much as $100,000 per deal. But it could also be very dangerous if you're a newbie, if you don't know what you're doing. So here are 6 things you need to know about fix and flip loans. Number 1, what are fix and flip loans? Fix and flip loans come in several forms and they're called by several names. 2 of those names are hard money loans and bridge loans. We'll cover those in details a little later. But essentially, a fix and flip loan is a short-term loan anywhere from 12 to 24 months used by a real estate investor to purchase the property, improve the property, and then sell the property for a profit. So it's essentially fix and flip. And these improvements can range anywhere from minor repairs to major reconstruction repairs. And they are reserved for either a single family residence, if you're a real estate investor looking to buy just a single home, up to 4 units, also known as a fourplex. Renovating any type of business, that will be a different type of lending, which will be outside of the scope of this video. Fix and flip properties are usually purchased either at auction or from a real estate wholesaler, and they are sold as is, which means that there are no inspections, there's no appraisals, and this is what makes it especially dangerous if you don't know what you're doing. The whole thing about as is key. You need to understand that it's like going to an auction and buying a car without really test driving it. It's the same. You're buying a house without really looking at the structure of the bones. You're buying it on site, which is what makes some of this either very, very lucrative if you know what you're doing, or very, very bad if you don't know what you're doing. Number 2, advantages of fix and flip loans. It seems like the demand for these types of loans is ever increasing. It seems like the market now, it's flooded with more money than ever. The opportunity has never been greater for someone like you who wants to get into house flipping or fix and flips. And it's for 3 reasons. Number 1 is secure investment. The collateral itself, the property, is what secures the loan. So in the event of a default, the real estate, the lender, can actually take the property back. So it gives them confidence. The second reason is the short duration. These are 12 to 24 months loans. So the money that is at play, it's not at play for years and years from a traditional real estate loan, which could be 15 or 30-year mortgage. This is a 1 to 2 year loan. And last but not least, on the advantages is diversification. Remember, we're talking about very wealthy individuals who have a lot of disposable income and they're looking for a way to diversify their assets, basically hedge their bets against the stock market. So they don't want to have all their eggs in one basket, so they want to have some money in the stock market and some money making great returns on this type of industry, which is why they get involved in fix and flips. Number 3, where to get a fix and flip loan. This is the part where most newbies struggle with, where to get the money. And this is where most go wrong, because you can't just walk into your regular bank or community bank and ask for a loan. And here are the 3 reasons why that's not going to happen. Number 1 is the buyer is typically purchasing a distressed property. Think about it. If you are a real estate investor and bought a property that needs a lot of renovation. A bank is going to be nervous because they're going to just give you the loan for the property. You still have to come up with the money for construction. They don't like that kind of uncertainty, whether you're going to be able to fix the property and then sell it. They just don't like that. Number two, banks, traditional banks rely heavily on your FICO score, especially if you're inexperienced. If your FICO is less than 680, forget it. A bank is not even going to look at you. Now, with that said, some of the hard money lenders and some of the private lenders and some of the asset-based lenders or bridge loan lenders will look at your FICO with a lot more scrutiny if you're a new investor. If you're a new real estate investor, they're gonna look at the deals that your deals that you've made over the last 3 years. They usually want to see anywhere from 1 to 3 deals in the last 3 years. So if you don't have that, your FICO is gonna be important. But even more so for a bank. So that's why you don't want to go for a bank if you have a low FICO. And the third reason you don't want to go to a regular bank is because the property itself is bought as a distressed property, so it needs a lot of renovations, and a bank is always reluctant whenever their asset is not perfected, meaning that it's an asset that can just take back and resell it in the open market without having to fix it up, because they're not in the business of fixing and flipping properties. That's why you don't go to your regular community bank. Number 4, types of fix and flip loans. Now, I usually like to put them in 2 categories. They're for the inexperienced investor and then for the experienced real estate investor. If you are an inexperienced investor or have less than, say, 3 to 5 deals in the last 3 years, you're gonna get a hard money loan. Experts can seem to agree with the hard money loans. The concept of hard money loans comes from. Some think it's because it's just hard to get, right? As I said, you don't go to your bank to get a hard money loan. And the other reason is because there's an asset-based loan, so it's tied to a hard asset, and that is the real estate that serves as the collateral. So regardless of where it comes from, a hard money loan is basically that can go from anywhere from 12 to 24 months. Rates, the interest rate is usually an interest-only loan that goes anywhere from 10 to 15% APR. Now, this is not a permanent loan. This is just a loan to secure, improve, and sell the property for a property. So don't get too kind of caught up in the interest rate. But it also has points. Now, a point is a percentage of the loan amount borrowed. So just to give you an idea, so if the hard money lender is going to charge you 2 points and you're working with a broker, say someone like me, right? Or anybody that is helping you, and they want to charge 1 to 2 points, they say it is 4% of the loan on a $100,000 loan. That would be $4,000 added to the closing costs. So lenders typically make their money on the points that they charge up front and in the interest rate. The good news about a hard money loan is that the lender typically has a choice whether they want to accept interest-only payments during the duration of the term of the loan, and they get paid everything at once they flip the property, or they can actually ask for a monthly payment. It depends on your relationship with the lender, it depends on your experience, it depends on multiple factors. So the next type of loan is for the more sophisticated type real estate investor who has a track record, a resume of doing deals, and those are bridge lenders. And it's also known as a bridge loan. These lenders are typically institutional type investors. They are large lenders, they are nationwide lenders, they will lend in multiple states. It usually tells you on their websites. They work with commercial brokers like me, and they have matrices where they actually tell you exactly, you get more favorable terms, you get lesser rates, usually you can get anywhere from 6.99 to 9.99. While then an inexperienced investor will get 10 to 15%. So they're more generous on lesser interest rates, and also they will charge less points and fees. Why? Because they know that an experienced investor is going to give them a good return investment. They're going to take that property, they're going to do the renovations just right, and they're going to flip it on time so everybody wins. The house sells, the real estate investors get paid, and the bridge lender gets their money back, and they're ready for the next deal. Number 5, costs of flipping a property. Now pay attention, this is very important. This is where a lot of newbies can go belly up. The costs associated with flipping a property fall into 4 main categories. Number 1 is the purchase price of the property, also known as the acquisition cost. Acquisition cost is a big thing. You've heard it say before, in real estate, you don't make money when you sell, you make money when you buy, and you buy right. There are concepts called, loan to cost or after repair value of the ARV. I'm gonna cover those in future videos, but for the sake of this video, you make money when you buy. You wanna buy a property as cheap as possible, possibly with an auction or from a wholesaler, anywhere from 40 to 50 to 55 cents on the dollar, so you can spend some money, 20 cents, so you can sell it for a 30% profit. So again, those details are coming in other videos, what I'm gonna be calling matrix, loan metrics to how to make sure you're making profit. Anyway, number 2 is holding costs. And those include, if you're gonna keep this property, it may take you 2, 3, 4 months to actually flip this property while it's in the market. You're still gonna have, in some cases, homeowner fees, homeowner association fees. You may have utilities, you may have to have a gardener, making sure that the property is looking right, insurance payments and the like. Those holding costs are key. You need to understand what those are long before you actually get ready to have the property listed on the market. The next one is renovation and the construction costs. Those are this is the biggest cost. So you say you buy the property for, 50 cents on the dollars, and it's gonna cost you 25 cents, say you bought a property for $50,000 and it's gonna cost you $25,000 to renovate the property and get it ready to be sold. And the hope is that you can sell it for $100,000 and you pocket 25. That's the simple math. Those renovation costs, you need to understand what they are before day one. Last but not least are your selling costs. Let's not forget those. You're gonna have to pay realtor fees. If you have if you have the seller's agent and you have the buyer's agent, usually anywhere from 5.5%, anywhere from 5 to 6%, usually 5.5%. Now, staging and closing costs. I usually tell borrowers, you're probably gonna pay anywhere from 7 to 10% of the purchase price in closing costs. So those are the 4 cost buckets associated with flipping a property. Number 6, last but not least, what do fix and flip loan lenders look for in a real estate investor? Above all else, they want experience. Think about it from a lender's perspective. I'm about to give you money, and what assurances do I have as a lender that you're gonna pay my money back? Not only am I gonna get my money back that I gave you, I'm gonna get a handsome return for it. I'm gonna charge you some points and fees, and I'm gonna charge an interest rate, and I'm gonna make money on my money. So the first thing that they look for is experience. So it begs the question, wait a minute, so if what fix and flip lenders are looking for experience, and then but you can't get experience unless you get a loan, so where do you go when you don't have the experience that those lenders are looking for? Well, that's, as I said earlier, hard money loans. So you're finding somebody that can coach you, somebody who can take an interest in grooming you and helping you. If they feel like you can have the potential to do 1 to 3 to 5 to 7 flips a year, everybody wins. But if you don't have the experience, that's when you go to the hard money lenders. You don't go to the bridge lenders. So think about it this way. So I am a lender, I'm gonna give you money. I wanna know right off the bat that you know how to purchase right. You're gonna get that property just at the right wholesale cost or below. You're gonna get that property for anywhere from 40 to 50 or 55 cents on the dollar, that you're experienced at negotiating that as is property value, that you're gonna get it right, you're gonna secure the property, and dollar for dollar what your budgeting cost is gonna be for renovations. You're gonna know your holding costs and your closing costs. If you can show a lender that you know and you have the worksheets and you have the data and you have the market intelligence, that's gonna go a great length. If you don't have the experience, having the data points, it's gonna sound like you know what you're talking about. Now, I do have a worksheet that I've developed. It's called the Fix and Flip Analyzer. I will discuss that in my next week's video. So for now, I need to know that you need to have data points to give to somebody, to give them the reassurances that you are a sound investment. Remember, if I am a lender and I'm gonna give you money, I wanna make sure, I'd rather work with 10 people who do 10 flips a year than with 100 that do 1 flip a year. Do you see what I'm saying? So, what do fix and flip lenders look for? They look for experience, but you're gonna find those who are willing to help you. So here, I know I said a lot. Thank you so much for watching this video. Stay tuned for next week's video. Are you in need of a loan for your next real estate project? I'd love to help you. If so, send me an email. My email address is in the description of this video, and I hope to hear from you. Also, if you want to join a community of like-minded successful entrepreneurs just like you, then join our Facebook group. The link is below. I share tips, tactics, and strategies on how my clients are growing their businesses to 7 figures and beyond.